All right, I want to hit some of the companies with earnings today. One of them is Best Buy. I think this one's interesting. You have a $67 price target. You have a sell on it. Is that due to tariffs, or is there some other reason why you're seeing this name as a sell going into earnings?
Yeah, it really has nothing to do with tariffs. What we see, we're out in the field a ton, Frank. And so we're in a lot of stores. I was just in some stores up in Massachusetts. The stores are empty. They're struggling to understand what to put in those stores. Amazon obviously has a big share of electronics. You know, Costco's been growing very quickly. So the model itself, we feel, is broken. And, you know, when you walk into a store, there's empty end caps, there's empty space in the store. It really gives you a pause about the model and where it's going from here. And one good thing I would say, their customer service is good. But besides that, we worry that Best Buy doesn't really have a big place in retail going forward. And that's what drives our sell rating.
All right, I want to go to another name that you also have a sell rating on. It's pretty interesting. We were showing this. This is one of the winners when it comes to retail. Dollar General, you actually have a price target of $82. This is a company trading right now at about $1.13. You have it declining very significantly. What happens to this company going forward that you see it moving to the downside?
Yeah, I mean, so on the good news side, we had a sell on this company for a long time and then took it to a hold earlier this year, then back to a sell. So the good news side is they're actually executing better. But after you get through that, the news is really bad in our opinion. Pricing, we think, in everyday essentials is starting to come down. Good for the consumer, not good for companies like Dollar General. They're also facing increased competition from Dollar Tree, which is adding in a lot of consumables in their multi-price point. A lot of competition. Amazon announced their rural expansion. That's bad news. And then, of course, Walmart, who they compete with more than anybody, with their Walmart Plus. We do think Walmart gets more aggressive on price. And so we think there's a lot of downward pressure on some of these products that DG sells. I mean, in the end, it's almost like a supermarket. And then the other thing I would say is their pricing. It's kind of weird to say, hey, Dollar General doesn't have good pricing, but all our pricing surveys flag the idea that they are priced well above Walmart, especially when you get out of some of the packaged food areas. So yes, we don't like Dollar General at all. What we're expecting this quarter might be okay. Some of these trends are very, very recent and are going to be developing over the next 12 to 18 months. If it's a good report, we tell investors to sell the stock.
So, Scott, it's really interesting that you're seeing these potential headwinds when it comes to Dollar General. You kind of see the big rise in the stock, then it flattens out. It sounds like you're saying that's partly due to pricing and some share going to other retailers like a Walmart. Right. As we go ahead, we showed Dollar Tree as well. We see big rises in both of those names as we saw more, I guess, budget-conscious consumers in the beginning of the year that were concerned about tariffs and other economic issues. What retailers do you see benefiting in the back half of the year, as I still think we see a pretty budget-conscious consumer?
And we do. And there's not much, I think, as I look at, you know, I've done this for almost 30 years, as I look at our coverage. And I was talking to one of my associates yesterday. We don't like much, which is kind of a weird place
Wow,
to be.
Scott.
A lot of sell ratings. Dollar Tree's the exception. And it really has nothing to do with the tariffs or the macro. It really has to do with their multi-price point strategy that they're rolling out. It's something they very much stumbled on until this year. So we think they're making a lot of traction that can drive sales, that can drive traffic. And then, of course, as the consumer, you know, seeks out value, that's good. That's kind of the icing on the top of the cake. But we think Dollar Tree is very interesting over the next 12 months. And we think their earnings are going to rise very rapidly as they roll out effectively, finally, multi-price point.